Okay, good morning. This is Meir Valensky with Driving Markets. Hope you're well. Quick reason why it's called Driving Markets for all those new members joining. It's called Driving Markets because I am driving while talking about markets. It's called Driving Markets. It's become very popular actually over the last 12 months. What started off as a small, just by the chance, let's do an upload talking about markets, is now built into several thousand followers on Instagram and YouTube, and obviously on Twitter. So it's very, very popular. I hope you enjoyed the channel. If you have any observations, then please tell me how you think I could improve the channel. I'm always looking to build and improve and give you what you need in terms of good media coverage on the broadcast regarding financial markets. And let's go into the quick caveat. Anything said in this piece is an opinion only. It's not financial advice or investment advice. Let's kick off with Driving Markets. Let's go. Okay, do you remember the last few days I've talked about a bear rally? So what's a bear rally? As I said yesterday, it's a jump in financial markets, jump in equity price, jumps in assets during a bear market where the trend is down but the markets have jumped up. And what normally happens is that the investors or the traders think or believe that this may be the end of the bear market. They get sucked in and go and buy or trade or go long, and then they end up regretting it, having to close out and sell their long positions, further pushing down asset prices. So that was a classic bear rally on Monday and Tuesday. Wednesday the market did go up initially and then was sold off in the end, and yesterday it went down again significantly. So what you've got yesterday is the Dow went down below the 30,000 crucial psychological level. I was telling everyone, in my opinion, of course, that you should sell the market, issuing sell notices across the board, whether on Twitter or Instagram or YouTube Shorts or YouTube, just to sell the market. And that should be the case continuously because the market is overall going down. The main driver is ongoing comments from the Fed and different Fed governors that this inflation needs to be tackled. The Federal Reserve is not going to give up on fighting inflation, and that's furthermore taken all of the excitement of the rally, and the investors and traders began to sell the market. Interesting, let's look at a couple of things. So you've got a bit of dollar strength again. The pound has fallen again because Liz Truss is just, I call her Liz Trust who can't be trusted. She's a very good orator, but their policies are completely wrong. So that's pushing the pound down and pushing the FTSE down because they seem to be out of touch with reality and how to deal with the present economic climate. What they should be doing is they should be cutting back. And Andrew, who's got no balls, Bailey, is simply not strong enough to be a governor. He should be raising interest rates immediately by 100 basis points, which he hasn't done. And that's just, again, bred lack of confidence within the UK pound. So the UK pound is being pushed down again and will go all the way down to, unfortunately, to 1-on-1 against the dollar, because the Bank of England does need to take immediate action. If they were to take immediate action, then that would send a shot of confidence, an injection of confidence within the financial markets, that they look like they're in control and doing and knowing what they're doing, but they haven't done that. So the dollar's rallying, and the pound again is under pressure against the euro, against the yen, and also the Aussie dollar and the Canadian dollar. Looking at Bitcoin's always a big one. Bitcoin, I keep getting asked all the time about Bitcoin. So Bitcoin itself is below the 20,000. I'm a big seller of Bitcoin, in my opinion. I think it's going to go all the way down to 15. A lot of people just don't believe it, don't accept it, but it is going to go down to around about the 15,000 level, just to be aware of that. Sorry, I'm just maneuvering here. Okay, right. And also what you've got to look at is gold. Now, gold went above 1700, 1715 recently on the big market rally. It's they were oversold. Gold was oversold, and the precious metals actually were oversold to a degree, and therefore gold has bounced, and I think it's going to float down to around about the 1675 level again, test that big support. If it holds above that, great. If it falls below, then it could go all the way down to 1600, and from there it will look like a clear buy in my opinion. So gold, silver is also very, very strong on the precious metals fronts. People want to know what to do regarding those particular precious metals. Oil is on the way up. OPEC's going to continue cutting production because it's in OPEC's interest that oil stays above $100 a barrel. That's what they want. Remember, OPEC is made up of several countries. The biggest member is Saudi Arabia, but they all want oil to be high. So as long as oil falls, it's going to be supported by OPEC, and they're going to keep on cutting production, and that's going to impact on the price of oil, obviously, of inflation. Joe Biden is fuming with the Saudi Arabians because he went over there effectively to beg them to increase production in order to lower the price. That would give the Democrats a better stance in the midterms coming in November, but that's not happened. The Saudi Arabians and OPEC have said just do what they want. They're ignoring Joe Biden because he's very, very weak. Moving on to bonds, the yield on the 10-year treasuries back up there, so that's also frightening the markets. You've got to look at the Nasdaq as a risk index. It's going to go down because everything within there is high risk. A couple of shares that I wanted to focus on, that for some reason people think Apple has reached the bottom and is going to go back up. Apple's not going to go back up. Apple is going to go all the way down to about $100 a share. And also you've got to look at Facebook. Facebook's also under massive pressure, and that's going to fall below $100 a share, as well as Amazon and the Netflix, and you've got other aspects of Google, because all that advertising revenue on those media companies is being contracted. As far as Apple's concerned, I said over and over again, it's brought in nothing innovative, and therefore it's going to be under pressure because the company it lacks clear, innovative direction. A lot of the top designers have actually left Apple, so it comes in as a particular sell. And where we're going to go forward today, today on Friday, you've got the non-farm payrolls coming out. Now that non-farm payroll is a massive number. If it exceeds or over and above 290,000, markets will absolutely trash. However, if it comes in below 290,000, that will give them another indicator, as was on Monday with the Institute of Purchasing Managers Index, the ISM, that will give a survey index, should say, that will give another indicator that maybe the Fed may lay off, might have come to an end of its rising in interest rates, and therefore the markets would jump if the number comes in lower. I don't believe the Fed's at the end, or the end is in sight of interest rate rise. I think we're going to go all the way to 7% in 2023. I was told I was complete extreme in January this year when I said interest rates in the States would be 4% by year end. I was told, and I was criticized and commented on by all the professionals and all the colleagues, that I've got it wrong. There's no way, maximum 1.5%. So I've got it right this year. The question is, will I get it right next year? Will rates be 7% in the States next year? Mortgage rates at all-time high. 2-year fixed rate in the UK is running above 6%, and that's going to have a massive impact on property prices and a massive impact on people's ability to repay their mortgages. So overall, we're in a very, very cautious time. Thank God we've got full employment, so everyone's got a job. But besides that, that's more or less it. I wish you a good Shabbos, have a good weekend. This is Meir Volensky with Driving Markets. Like, subscribe, send, share, friends, the whole works. You can look at my Instagram and look at other media if you so wish. It's constantly updated during the day. Have a good day.